I've never met a successful entrepreneur and investor that played a perfect game. Because in reality, no one can play a perfect game, but it's those mistakes, it's those errors, those are the things that will help you make better decisions also later on. Hey guys, so we're in the midst of a bear market, not just in crypto, but also in the stock market. We were just also after another larger issue from the coronavirus and the lockdowns, and we're not even out of that yet. Because of that, it's dragging different asset classes, and the fact that there's no free money coming from the US money printer moving around right now, it makes it harder for assets to start to go up. It makes it harder for people to pile into assets. That's why we saw stocks, property, and crypto go up in 2020. We're seeing prices stagnate, plus the looming recession also in the US. What do you do if you are in a losing position? I always tell people this, that there must be a reason why you are investing. And it can't be just because you want to get rich or you want to moon. It's so important, especially in times like this. When the market is down, everything's scared. The name of the game is for you to figure out and align how does this fit in towards your goals. What is it in the grand scheme of things? If you're 28 years old right now and you're investing for retirement, say 60 years old, then it doesn't matter. Why? Because if you're invested in something that's good, it's gonna go back. The fact that you're investing for a goal in the future, then whatever drops that are happening right now shouldn't bother you because you don't need the money. What's more important also above and beyond making a goal for investing is that whatever capital that you deploy, it's money that you don't plan to touch, it's money that you don't want to use, so that in times like this, you're not scared. You know what you're doing and you're just following your plan. If you haven't structured your financial plan yet, I highly suggest that you do that. I highly suggest that you spend a lot of time to be able to fix that. Because that will be your guide when things are not as fruity, when everyone does not want to invest, when everything is a bit scary. It's what will help you also. If you already have your financial plan, then follow it. If your plan is telling you to build a base, accumulate, and stack right now, then you do so, regardless if a lot of people don't want to do it. That's the strength of people who do well in investing. They know how to disregard the noise. But what's the most important thing is they follow the plan that suits them. So what if you're down? If your plan is telling you that you still need a lot to accumulate, your goal is to put in 10 million pesos, but you've only placed 2 million, then why should you stop? When it's down, then you also have opportunity to be able to stack, add, and buy a lot more things at a lower price. I know that not a lot of people want to do it right now, but similar to the videos that I said, that when you do the opposite as what everyone else is doing, you will be rewarded also opposite as compared to what everyone is actually getting. And everyone is getting average. If you stick to your guns, you'll probably end up getting above average results as well. I don't want to undermine people's feelings because it's your own money also. Something that you worked hard for. But now since the investment is down, there's bits and pieces of your mind that would say that I should have used that money elsewhere. When you start losing money from that, there's a large piece of education and experience that you get from your losses. And if you look at every successful entrepreneur or investor, they had their share of losses as well. I've never met a successful entrepreneur and investor that played a perfect game. Because in reality, no one can play a perfect game, but it's those mistakes, it's those errors, those are the things that will help you make better decisions also later on. Especially when the entire market also is down, even mutual funds are down, even the ones that are held by professional fund managers, analysts. If they're also losing money, then it's something that you know that's systemic, and you can mine that will help you also later on to continually make better decisions in your money. And it could also help you also realize that maybe this asset class is not something that I should get into because it's too volatile for me. It's something that I don't understand them as much. It's something that I don't like as much, which is also very, very true in the world of investing. A large part of what you do when you're investing, it's primarily emotional. And when you become emotional, it's harder to actually decide based on logic. So if you feel that in all of this, either from stocks or NFTs or crypto, that you feel that it's somehow too volatile for you, then it's okay. At least you've realize it now. Because everyone wants to invest in stocks, crypto, and NFTs when it's going up, when it's a bull market, when there's optimism, when there's excitement. But when it's down and no one wants to get into it, that's where the rubber meets the road. That's where your convictions get tested. That's where you get to realize also if that asset class is something that's for you. Because investing is cyclical. You have to realize that it won't always stay up forever. If you can't take the volatility in times like this, that's when you need to revisit the asset class that you are into. So it's not worth it also if you can't sleep well at night. It's not worth it also if you're uneasy based on the assets that you actually have. Even if you diversify, there's still a feeling of sadness, either pain or regret whenever you see your money go down, something that you worked hard for. I implore you at this time, in the midst of loss, don't quit, don't stop. The reality is also when people start to lose money, they quit, get out, and they stop. If you stop, whatever experience and skill that you've gained in all of this goes out the window. Whereas, if you continue, regardless if it's via entrepreneurship or investing, the money that you lost, you get the experience and the skill there, which will allow you to get better. I'm not saying come in full throttle and start buying. I'm saying assess and see where were those mistakes, what can you do to make it better, and should you have money, what would be a better way for you to be able to deploy that? Is it in the same asset class, or is it in something different, or is it about dividing your money properly? But losing money is not the end, and I always think about it this way, especially when I was younger pa, or even up until now. When I lost something, I could work hard to be able to get that amount. So when you look at it from that perspective, it will cause you to take in more risk also. But I'm not just recouping it. I don't just have this amount of money already. I have wisdom to be able to discern how am I supposed to deploy my capital in that regard. I just want to end this in saying that losing money is not the end. Losing money does not mean you should quit investing, but you leverage the wisdom, skill, and experience that you've got from that loss. And in this era that everything is bare, everyone's not so excited, to be able to propel you that when things get better, when the cycle reverses, because please do note this, that there are cycles. It's not a question whether the market will reverse, it's a question of when, and it's a larger question of what you're doing right now while the market is down. It will determine how will you be also when the market is good. So there, I hope that this is something that helped you, and this is something that gave you wisdom and insight also for you to be able to weave through the markets. Marvingermo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.